Hello there. This is the market update for the week of April 15th. Um, S&P 500 went up by a lot, like I don't know, 30 points, 33 points. So after having the most bearish weekend and since the beginning of the uptrend, now I had an even more bullish one, and that actually went above the previous low. So this rally it's still alive. So intermediate time frame it's still bullish. Let's see what we can make about the long trend. Okay, so let's see what is okay. So definitely this I am coming back to this trend line. Okay, this looks like it's penetrating on the upside, which obviously is bullish, So at this moment, the levels which I'm looking to be conquered are this one in here, the serious high, most significant one around 2100, and obviously the most important one it's in here, just above 30 points above. Um, until then, I'm staying not quite bearish as I used to be, but let's say I'm neutral at this point. Okay, on the long term, I'm saying that because look, the moving averages are pretty much so they're almost crossing on the upside in here. So this is something I don't want to get bearish when this is happen. Okay. If this is will be proven to be a whipsaw, that will be a significant one. And to be honest, I haven't seen something like that in 20 years. Maybe these moving averages work pretty well. Okay, so um, let's see what is gonna happen. I told you many times about this DMI, directional moving indicator. It's a momentum indicator. I like it because it's not related to the price itself. It's more related to how they make lows and highs the previous day. It's a complicated formula. I saw it. I don't bother too much understanding that. The idea is it's a very good how to say confirmation signal. So I'm not using this as a buy or sell signal, but if I have a signal from moving averages which are related to price, obviously, and I have a confirmation from this, that will make a much stronger case. Okay, so what can I say? So this is in weekly chart. It it's okay. It's pretty good. Like you see, it started in here. Say what was that? 1450, and it stayed bullish pretty much until this moment in here. So it pretty much caught this huge rally in here. I mean, it was a confirmation. Besides the moving averages, obviously didn't cross, but this was a nice confirmation. Then happened the warning side in here. This big drop. Okay, move up again. Okay, then went bearish. When was that? The end of actually December 2014. Okay, it's pretty high level. Okay, only this the small drop in here was enough to turn negative, and from then look didn't turn positive again. So but now they're closing. Now they're touching again like they did after this huge rally from September to November. Okay, but again exactly when it was about to change direction to be positive, another drop happened. And now let's see what is going on. If this will turn positive, that will be actually a very bullish signal. Okay, in confirmation of whatever is happening here. But as I say, I'm trusting more the price above anything, about volume, about anything else. So I need to see price above this moving averages to get bullish. Okay. Um, Let's look at the on the monthly chart. Monthly chart, it have less details, but it's less noisy at the same time, so it's easier to spot some trends. So if you're looking here, I mean, it marked the beginning of the bear market very well. Okay, it turned positive pretty late. Okay, like here, another move down. Which is everybody was foolish by this drop at the end of 2011. I think without that intervention, definitely we probably had another leg down. But okay, the bulls are saved once again by the Feds. Here turn positive. Okay, so we're talking now about 2012, and again it's look, it turns negative in here on this move down on August last year, and it didn't turn back again. So it's very slow, as you can see. By the time probably it turns positive, a big move up already happened. Okay, but you want to see this. You want to see if you're already bullish from other point of view. You see this confirmation. You like this. So I'm telling you, I like this particular among many others indicators because this is not strictly coordinated with the price movement. Okay. So again, since I'm here, I'm take advantage of this, and let me look at MACD again. I show this MACD, which worked pretty well. This modify for this. This is monthly again. So beginning of bull market here, starting of the bear market here, beginning of the bull market here, bear market here. Pretty much was absolutely perfect until now. Here it turned out like this is the beginning of the bear market. We don't have confirmation from other indicators, from the moving averages, but look, we have no intention to turn positive again. So this is, if you're a bear, you will be more encouraged by this. But trust me, if it's better not to be biased, because if you're biased, then you'd see whatever you want to see. That's the problem. So let's see. In other news, I got rid of my those few SDS shares. And that's the point. That's the problem when you're on the wrong side. Okay, when you try to guess a move, and like I try here, I say it probably will bump into a small 120 when it will move down, because I already had this part, and I already had this crossing averages, which happen very rarely, So I was pretty confident that will go down from here, or around this area. So this was like around 980, and I keep it, and I keep them, and I keep them. I was hoping, which is not good. This is not a valid trading strategy. Hoping after each of these moves down, I go, okay, maybe that's it. Now I'm getting rid of it exactly here. Okay, so I lost 100 points. Thanks God I didn't invest too much. Okay, but just the thing, and probably which I psychological. The moment where you go on the wrong side and you keep them and keep them, and you see losing value every day, the moment you get rid of them, it's probably when they're gonna move down. Okay, so I won't be surprised if exactly from here, from next week, I'll be the start of a move down, because that's the psychology. That's what happened, when when you go on the wrong side. That's why people keep when they have a losing position, they keep adding. They say, okay, now it's cheaper and I need to add more, and at one point they are fully invested, and the market still goes against them, and finally they get rid of them. When they get rid of them, that's the bottom. Okay, that's the problem. Okay, So we're not talking about the big bottom or the big top in here, you know, but just I give you something about traders psychology, you know. And even if I have a lot of experience, look, it did happen to me. It did happen to me. So I'm not ashamed to admit it, you know. So it could happen to everyone, especially if you don't have experience in stock market. So let's have a little bit of look at the other indicators. So Nasdaq never gave me the bearish signal. Okay, so that's one of the things. So maybe if I see this moving down as well, in addition to S&P 500, and that will be a problem. But from my experience from before, you know, actually S&P 500 is the one in the middle. So once the S&P 500 gives a move either up or down, the third index is just a matter of time until we'll go in the same direction. Look, didn't happen this time. So I'll let you know when this will happen, if we're gonna see a move down. So at this point, how can I put it? You know, it didn't do too much for the bullish side. It didn't do too much because it has to clear this. It has to clear these stops in here. It's no other way, you know. So now it's the best case right now, you can say the market is moving sideways. Okay, that's the idea. If you ignore this moving up and down, you see in the last year that was the moving on the it's like a consolidation phase. Okay, let's look at gold a little bit. I know a lot of people trading this. So gold have a little bit lost a little bit, but doesn't change at all anything about the technical. So it's still on the bullish side in here. I think that's a good bet in here. Silver not as much, but it had a very good week. Look at actually finally cleared the training range, made a significant move above. But look, it's less bullish than gold, because look, small 120 how far it is compared to the gold, which is already above. So it needs to move like 750 to be to catch the gold from behind. Okay. What else? Okay, I promised someone to have a look at IBB. Okay, this is the biotechnology, you know. This was pretty much hammered. It has absolutely superb move on the upside from 2009. Unfortunately, now it's in a very bad condition, say on long term. Okay, this is we have a very steep downtrend line in here. Really bearish looks for me. But however, you can trade them obviously on the shorter time frame. So usually I look for 2 hour or hourly or 2 hours. This is about the best time framework to judge the intermediate time frame. So here, as I mentioned to some people before, you know, I say, look, it's encouraging that it made a kind of double bottom, but this is temporary. Look, okay. So I sold. If it clears this way, you have a chance. So it cleared the 270, move nicely up, but look, lost a little bit again, but didn't move below this. Didn't move again into this kind of trading range. So as long as it stay above this, I think it's intermediate time frame buying opportunity. Okay, so this is okay. I cannot see. This is the downtrend line. So that serious downtrend line. Put it this way on a weekly chart. Okay. It may go in here. It may find a huge resistance in here. So I don't know. It doesn't look like it's a lot of room. Okay, 280, 297, 300. Okay. 20 points, percentage-wise is no big deal. So I say be very careful with this one. Okay, if you're already in there, that's it. You need to wait. Okay, if you don't want to take the loss. Okay. What else? The bonds, the one which I have in my oh, sorry, it doesn't have intraday. So this is a weekly chart. This FGMNX, it's a very nice fidelity bond fund. You know, I have some money, actually, like 50% actually at this point of my 401k in there. Okay, because it moves, it still moves up a little bit. You know. Oh, but the most important thing for me, I'm not losing money. Okay, if I'm on the bullish side, then obviously that's pretty dangerous at this point. So if you look back to 2007, look, 2007, 2008, from 2008 to 2009, you didn't lose any money. It was just sideways. Okay, so the people who entered, so actually here is the top somewhere. Okay, this is 780. Actually, you gain a little bit until 2009. This was the bottom, March. Okay, so from the top to the March, the bonds went up. Most of them did. Most of them did. However, this is not a junk bond. This is a pretty serious bond fund, you know. So we move slowly. Okay, in the last 9 years, from 740 to 11, you won't be you're making a killing here. But this is good when you're not so sure what's going on. You know, just put it in there. Switch from stocks to bonds and staying here. Junk bonds actually are as bad as stocks, so I don't see any reason why I should invest in the junk bonds. I rather go into stocks. Okay, so just keep in mind. Right, I'm gonna stop here. Okay, let's see how this will evolve, and we'll draw the more conclusion from there. Okay, be safe, good trading.